Welcome back. And in our top business story, the UAE economy grew by 4.9% last year off the back of higher oil production and growth within the non-hydrocarbon sector, according to an IMF statement. Harold Finger, who led an IMF mission to the UAE during February the 28th to March the 14th, stated that hydrocarbon growth also strengthened to around 2.7%, backed by strong trade, tourism and manufacturing. He added that real GDP growth is projected to moderate to 2.5% this year, but non-hydrocarbon growth will still remain strong. He also stated that the Washington-based IMF had earlier projected a 3.5% growth for the UAE economy, the second largest in the Arab world. The Middle East is set to see a boost in mergers and acquisitions in 2012, according to a recent survey. Global law firm DLA Piper's report shows that improved liquidity, a pickup in bank lending and growing financial requirements for regional companies will revive the M&As. 71% of respondents said they expect the maximum number of deals to happen in the UAE, followed by Saudi Arabia and then Qatar. 56% of respondents say that bank lending will boost M&A opportunities, while 42% believe increased availability of private equity will help. In terms of sectors for this year, 47% believe financial services and insurance will lead the way, followed by real estate and construction at 46%, and hospitality, leisure and tourism at 41%. Abu Dhabi Airports Company announced today that the total value of deals signed at the Abu Dhabi Air Expo reached above 1 billion dirhams. The show, the region's first general aviation exhibition, saw more than 10,700 visitors and 105 exhibitors from local, regional and international companies. Meanwhile, Tariq Al-Madani, the managing director of Index Conferences and Exhibitions, announced that business deals worth more than 600 million dirhams were concluded during the three-day Dubai International Pharmaceuticals and Technologies Conference and Exhibition. And let's take a look at the stock indices across the GCC. And looking to markets now over in the US, as US Treasury bonds sold off sharply yesterday. What does this mean for interest rates? And global equity markets have continued to trend higher, led by the tech-heavy NASDAQ 100 index, and especially Apple Computer, jumping to $589.58 yesterday and up over 45% for the year. So how long can this continue? Well, we spoke earlier with Bruce Powers, the head of research at Trust Securities.
Well, it looks like we've probably seen the bottom in rates, which are trend in the opposite direction of the bond price. As the bonds drop in price, as interest rates goes up. So with rates having been near record lows, it's not a big surprise that they'll eventually rise. The interest rates peaked back in 1981, and have been trending lower ever since. That trend is now probably starting to reverse, where we'll see rates starting to head higher. Investors have been moving out of safe haven assets like the U.S. Treasury, the German bond, and gold as the economy has been improving. Together with Apple, four other stocks, including Google, Microsoft, Intel, and Oracle, dominate the index, representing almost 50% of the performance. The volume in Apple yesterday was the highest we've seen in 2 years on a positive day. We have average analyst estimates for a 12-month price target of around $605 a share, but estimates go as high as $700 and all the way up to $1,000 a share over the next 12 months. But in the short term, I think the stock is technically overbought and getting more so as it accelerates higher. So it may still continue a little bit higher short term, but it's certainly getting closer to a correction lower.